Hello nieces, hello nephews, it's your Uncle Charles saying welcome back to my YouTube channel where we do unbiased price action analysis. Got the big breakdown yesterday, guys. What took SPY a few weeks back in mid-November to early December, the Bears took it all out in one day yesterday, okay? Got the breakdown of the triangle pattern, the chop phase, and I guess the trend phase. It took a day. It took a day. A big explosion to the downside, and it even took out this multi-month trend line here. Okay, so from here, Uncle Charles is gonna give you guys some levels. I showed you guys some new fib levels yesterday, how I got the fib levels in yesterday's aftermarket video. My aftermarket video had according to the YouTube algorithm, it had some good clicking. You know, people were watching it. There was good amount of likes. Shoot, with numbers like that, Uncle Charles may have to rearrange some of his schedule in the aftermarket and maybe go back to making those videos. But as of right now, I got you with the pre-market video. And remember, I'm going to give you guys levels. And when I use these levels intraday, I usually use it on the 15 to 30 minute chart. And breakout or resistance, I look to long or calls. Breakdown or support, I look to short or buy puts. And yesterday, like I said, it worked out so perfect yesterday, thanks to FOMC bringing back volatility to the market. I didn't think it was going to be this much, but it was more than I could ever ask for. We broke out 602. We had a 600 level as well. We broke that down. You know, multiple levels was broken down, and we used the 15 to 30 minute chart to navigate through the day, what setups we're going to take, stuff like that. Okay, so I'm going to give you guys the levels. Please add them to your chart so you know which pivot levels to reference as far as breakdowns and breakouts go. Okay, so I have right now SPY's at 589.8, so I have a fib level at 589.2. I have a support at 588 and then a fib level support at 586 with 584 below. Okay, so for bearish follow through, we want to see 589.2 fail to put 588 and 586 in play. Breaking down 586 would definitely be bearish. That's the breakdown of another critical fib level. All right, now I have resistant based on the multi-month trend line around 591, and then a fib level resistant at 592.6. The blue one is a macro level fib level, so they hold a little bit more weight. We lost that level yesterday, but the multi-month trend line and that fib level. So from here, if we already get a bounce to be bullish, even if it's just a relief rally, 591 and 592.6 must clear. Okay, and that would put higher targets in play. All right, 595, 596.5, 598, 600, and so on. To build any type of bullish momentum, those levels must clear. Why? Because it would recapture the multi-month trend line. It would recapture that macro level fib level. And that would possibly give us a false breakdown setup. Okay, now the false breakdown setup is not going to guarantee that we're going to head up higher. But usually, when there is a bottom, it starts off with a false breakdown setup. Okay, false breakdown setups are bullish setups, and it's the opposite of a false breakout. Look at this false breakout setup right here. When we cleared this level and we broke down that level, that's an example of a false breakout. So a false breakdown would be just like this, but the opposite to the upside. And I'm referencing the multi-month trend line 591 and the macro level fib level 592.6, and possibly I would play that to the upside, level to level. Okay, now level to level is very important because you look at the action like yesterday and it was amazing, but we have to be realistic here. Moves like this, especially on SPY, doesn't happen that often. Okay, as a matter of fact, what does happen often are level to level moves. Okay, that happens quite often. Big home run moves like these don't happen that often. These are the moves that retail traders want all the time, but it's moves, these are the moves that retail traders want all the time, but it's moves like these that retail traders get, these little small level to level moves. And that's something that Uncle Chart has always preached. We play a level to level. So if you do look to long above 591, 592.6 is where you want to take most profit. You get what I mean? If you long above 592.6, 594, 595 area is where you want to take most profits. Now, if you do want to try to catch a home run move, you do it with your runners. Runners are powerful, powerful tactics. Most retail traders don't do it. They want to catch a home run move at a whole position. And I understand why. We want to, maximize our potential profits. I get it. But my approach is risk management first, trading safely first, no greed approach. So when you play it level to level and take most profits at the next level, is that maximizing your profits? It's not. But you have to understand that most of the time, the market just gives us level to level moves. It doesn't always give us these home run moves. So if I want to make money consistently, I'd rather focus on catching level to level moves and leaving runners, because sometimes, every now and then, the market does bless us with a home run move. So if I leave runners, my runners will catch the home run move, and I can always enter more or re-enter on a winning position. Does that make sense, guys? How Uncle Charlie's sheep style approach is to the upside and to the downside doesn't matter. That's why I don't really care about predicting where the market's going next. My main thing is the pivot levels and following the price action. If it breaks down a level, I'm going to look to short and I'm going to play to the next level, and I'll leave a runner in case we go down even more. And if it breaks out a level or recaptures a lost level, I'm going to look to long. I keep it simple, guys. Like, you know what I mean? Triple Q also broke down a critical level, a crazy, crazy pullback as well. As of right now, I have resistance at 520.5. I would not look to long unless 520.5 can recapture. I have another resistance at 522 and the critical fib level at 523.6. Those levels must recapture to be bullish and put 526 and 528 plus in play. 520.5, 522, and 523.6 must recapture. Okay? To show bearish follow through, 519, 517, and 515.5 all must fail as support to give us more downside. And guess what? Unlike SPY, the RSI is not even oversold for Triple Q. So don't be surprised, okay? Don't be too surprised if more downside is, all right? Now, Tesla, looking at a 4-hour chart here, I have a fib level at 450.5, okay? If we are to be bearish, 450.5, and I have a support at 449 and 447. Those levels must fail to give us a move to the downside down to 445, 443, 441.5, and 440 all in play. If we are to go to the upside, got to get above 452, got to clear 455, 458 to put 460, 463, and 465 in play. Above 465, I would favor a lot more upside. NVDA has been looking bearish. Now, we had a head and shoulder pattern here. Head and shoulder, head, shoulder, right shoulder. Neckline was around 132. We broke it down recently, and we stayed below it. As of right now, NVDA is above it, trying to gap above it. So 132 is an equilibrium level. If above, NVDA may have a shot at a bounce, more upside. 133.5, 135 are resistant level. They must clear to put 136.5, 138, and 140 in play. A bottom is likely in if 138 and 140 can clear, but it must stay above 132 to give NVDA a shot at a bounce. Because if 132 fails, then that maintains the breakdown of the neckline and put 130, 127, and 124 or lower in play. Okay, so above 132, possible bounce. Below 132, above 132, possible bounce, and below 132 is definitely bearish. IWM is definitely bearish. I have a Fibonacci Support level at 222. If that fails, 220, 218, 216.7, and 215 are all in play, baby. But it got to break down 222 and 220 for more downside. If we are to get a bounce, well, I have a resistance level, a Fibonacci level at 224.5. If it can clear, then maybe we can get a bounce up to 228 or higher. But it got to get above 224.5. Bulls have a lot of work they need to do. But yeah, those support levels fail, 222, 220. Don't argue with the price action. We're heading down lower. Apple, finally a nice healthy pullback. It even got Apple out of overbought territory. Nice to see some healthy pullback going here. I do have resistance at 248.5 and 250. If the pullback is over and it's already bounce time and the dip buyers are here, then those levels must clear to put 251.5, 253, and 255 plus in play. If below 248.5 and 247 fails as support, then 244, 242, and 240 all in play. Pullback continues. Amazon with the beautiful pullback as well, breaking down at 226 level. It was beautiful. I have support right now at 222 and a fib level support at 220. If those levels fail, we are likely dropping down to 216, and if 216 fails, a lot lower we go down to 214.5, 213, 210.5 or lower. Okay, trust no bounce unless 224 and 226 clears, especially that 226 fib level. If it does, I'd favor more upside. 230 and 232 would be back in play. Meta, beautiful breakdown. As of right now, I have support at 606 and 603. If those levels fail, then more downside is possible down to 600, 598, and 596 is in play. All right, if we are to get a bounce, okay, resistance at 608 and 610 must clear. That will put 612, 614, and 615.6 in play. If 615.6 recaptures, because that is a fib level, a bottom could possibly be in. Microsoft with the beautiful drop as well. I have support at 442, 440, and the fib level support at 437.6. That level held yesterday, and now here we are gapping up. But if those support levels that I mentioned, 442, 440, and 437.6 fail, then this gap up is just a gap and crap. We are heading down a lot lower, and Microsoft is also not in oversold territory. To trust any bounce, as usual, lost levels must recapture. Okay, I got 444, 446, 448, and 449.5 as resistant levels. All those levels must recapture, at least on the 15 to 30 minute chart, to try to get a bounce going. DXY, you guys can see it right here. From December 13th to December 17th, it was consolidating just below that 107.1 resistant level, and boom, with the breakout. Okay, right now resistance at 108, and if it clears, 108.6 and 109 are the next targets. Okay, I'm not trusting any pullback unless we break down support, and I have support at 107.5 and 107.1. Those levels must fail to get DXY bearish again. Coin is definitely bearish. We had that area where it was like, oopsies. We had this area right here where it bounced like not once but twice around 304.5 fib level, and they broke it down yesterday. What a beautiful drop. As of right now, I have support at 290 and 288.5. If we are to head to the downside some more, those levels must fail, at least on the 15 to 30 minute chart, to confirm. And that will put lower targets in play, 285, 283.5, 280, possibly all the way down to the 275, 273 area. Definitely a big possibility. I'm not trusting any bounce unless we can recapture some lost levels. Okay, I have resistance at 292, 295, 292, 294, 296, 297.4, which is a fib level, 300, 303, and 304.5. Okay, please add these levels to your charts, guys. And what's next? Doge hitting it bounced off that fib level around 38 cents. Well, 34 cents actually. 34.5 cents. Trying to hold. I'm not trusting any bounce on Doge unless 38 and 40 cents can recapture. Okay, we had this false breakdown around the 38 cents level. We bounced, but it was a dead cat bounce and broke it down. So I'm not trusting any bounce unless 38 and 40 cents recapture. Otherwise, I'm bearish on Doge. Bitcoin is not looking bearish. Look like it just, I don't know if it's forming a wedge. Looks like it definitely needs a pullback though. And if it does, 100K, 98.6K must fail. 100K and 98.6K, I'll take the pullback a little more seriously. Otherwise, likely consolidating to break out 104K again to put 108K or higher in play. All right. Thank you guys so much for watching. This is my pre-market video. I appreciate you guys. I hope you guys have a green day today. Peace.